Welcome. My name is Joe Cantu, and I wanted to give you my interpretation of volatility. What is volatility? People talk about it in investments all the time. You hear it on TV, television, radio. I mean, just everywhere they're talking about volatility. I just wanted to give you my take on what volatility is. So let's get started. So here I have two different securities in November all the way till I guess about the beginning of December. One is Sherwin-Williams, and Sherwin-Williams, it moves up in the red. It's moving up, in the red and green and red, however you look at it. And when it's pulling back, it's red, and when it's going up, it's green. The next security, the yellow line, is actually Procter & Gamble. Now, both of these securities made 15% during this particular time period. Now, I'm not recommending these securities. I'm just showing you these securities for educational reasons to understand volatility. So if we actually plotted a trend line, which we call in our business, you could almost make a trend line look just like this. And if we look at it, this trend line shows, it shows it's about 16%. But roughly, when I looked them up, they were a little bit over 15, both of them at the same time. Anyway, so that would be the trend line of Procter & Gamble, the yellow line. But now, let me plot the trend line of Sherwin-Williams. So it trended up for a few days, then it trended down, then the performance of the stock went up, then the performance of the stock went down. Again, ended up at about the same place, 15%. Well, this up and down movement that we see, we call volatility in our industry. So if we look at the volatility of Procter & Gamble during this time period, we say in our industry that Procter & Gamble was not very volatile. And what we mean by that is that it doesn't go up and down as much. So the word volatility in our business means that it goes up and down. And obviously when it's moving down, you have pain if you own that particular security because you're losing money and it's tough. Then when it moves up, you're happy, and then when it's moving down during those few days, you feel the pain again. So now let's relate this volatility. So now that we've learned what volatility is, it's basically the up and down movement of a particular security. But typically that doesn't make any sense unless you understand that it's normally relative to, say, a straight line. When you can see it visually the way I'm showing to you now, you can visually understand what volatility is. It's easier to see a picture. You know, they say a picture's worth 1,000 words. So now you can visually see it and understand what volatility is. So let's now relate this. Now we can look at it down here. This is a histogram of Sherwin-Williams. You can see in the blue it's moving up, and in the red it's trading down. Each one of these little pillars is, I think I have it set on hour. So these are hourly movements of the particular security. Up, down, up, down. So now you can also visually see it in a histogram. You can visually see the volatility right here for Sherwin-Williams. Anyway, my point is a picture is self-understanding. Now let's relate it to your risk tolerance. So naturally, a person who's moderate to moderate conservative, let's say moderate conservative or conservative, would normally want to see a trend line more like this. So they prefer not to have volatile stocks that go up and down like this. Now, let me just say, I said in a podcast before, I think it's episode 37, volatility is not bad. Volatility is only bad if you're losing money. So this Sherwin-Williams could have ended up, it could have gone higher. or it could go lower and you can lose money. But volatility is bad. Now investing, I do want to say, investing has risk of loss. So if you are investing in the stock market, for disclaimer reasons, I need to say to the public that investing has risk of loss. But this does show you visually about volatility. Now obviously if you don't want to have a lot of gain, now this 15% was quite a bit, then obviously it'd be a lot different if it was more of a flat line. You don't make as much of a gain, and that would be a very, very conservative person. Anyway, that concludes my video. I hope you learned what volatility is. If you have any questions, just give me a call. Thanks.
Joe Cantu, Chief Investment Officer of Cantu Tactical Wealth Management, is your host and has over 30 years of experience in the retirement money management profession. He is a West Point graduate with a master's in business administration and has worked for 3 of the largest Wall Street firms as a stockbroker and portfolio manager. Over 10 years ago, he created Cantu Tactical Wealth Management, which actively balances and selects investments based on a tactical approach rather than the traditional strategic management method. Instead of the buy and hold philosophy, he believes in the pursuit of finding investments showing momentum, performance regardless of the direction of the market. His experience includes IRA accounts, 401k rollovers, trusts, endowments, defined benefit plans, 403bs, and 401k plans. Additionally, he served as a night college instructor for seniors, teaching high net worth retirement and estate planning for 14 years. Podcast views and personal opinions are for educational and entertainment purposes only and does not constitute a recommendation. Investing has risk of loss, and you should consult with your own advisors for any financial decisions. Cantu Tactical Wealth Management and Joe Cantu are a fiduciary firm and registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.